Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news the economic bouncebacks have been rather weak and probably not enough to withstand a renewed virus surge. Advanced data for this weekend's American non-farm payroll release shows another recovery in jobs in June. Recall they fell 19 million in April and recovered 3.1 million in May, and now this June report suggests another 2.4 million jobs were recovered in the month. That is a net loss of 14 million jobs in the past 90 days. But the bounce back isn't as strong as analysts had expected. They'd expected a 3 million jump in June. American car sales took a big tumble in the April to June quarter, with GM reporting a 34% fall, similar at Ford and the Japanese brands, and almost 40% at Fiat Chrysler. There are now 2 June PMI reports out today for the US. The local ISM1 says the US factory sector expanded slightly in June on rising orders. The internationally benchmarked Market One says it contracted in a minor way, also held up by new order growth. Both, however, reported lower employment. Either way, it's a very weak bounce back on the factory floor. In Europe, they had a PMI bounce back too, but it was still weaker and still contracting. Only France and Ireland are expanding there. Germany is contracting quite fast still, mainly because it has been so export dependent. Globally, the story is similar. China's a bit of an outlier, as overall global recovery is very much being held back by Asian countries. But the better China data may pull them out of their slump. In China, their private sector Caixin PMI pointed to a definite recovery in manufacturing conditions, with firms signalling a further rise in production and renewed increase in new business. This version has outperformed the official one yet again. In Australia, property values have dropped for a second month in a row, and that drop has picked up pace as uncertainty builds about the financial plunge expected to come in September. And building approvals fell sharply in May, led down by a collapse in apartment consents. The US Treasury 10-year yield is up 3 basis points to 0.68% today, and the gold price has slipped back after yesterday's high, down $10 to $1,771 an ounce. Oil prices are firm marginally today. They're now just under $40 a barrel in the US, and the Brent benchmark is just on $42 a barrel. And the Kiwi dollar is a little firmer again, now just on 64.7 US cents. On the cross rates, we're up as well at 93.7 Australian cents, and against the euro we're firmer too at 57.5 euro cents. That means our trade-weighted index has risen to 69.5. I'm David Chaston. It was 90 at 9, brought to you by interest.co.nz.